This is Bob Guest with Keller Williams Realty. I'm here with Ken Renner, and we're talking about the Austin real estate market. What we've noticed and what we've been talking about the last couple of weeks is that the market has gone up and then gone back down, so to speak. In other words, the market trajectory was moving like this, and inventory was moving like this, and both of them have reversed, where the market has started to stabilize and inventory has actually started to increase. So it's a very quick change in the market in just a matter of 1 or 2 months. So it's not causing a big problem because the time to sell a house is still very small, but it's changing the market in a way where there's not a trajectory of the market. It's really just kind of stabilized.
Yeah, we're not seeing the multiple offers and the bidding wars that we were seeing just springtime.
Yeah, just a few months ago.
Yeah, so you gotta call your local agent because the market changes faster and we're in the trenches. So call a local expert because we're in the trenches and we know what's happening.
Yeah, we can feel what the market's doing before the newspapers or before anyone else can find out about it, and it's really quite dynamic. I mean, very dynamic how much it's changed in just the last few months. And people still are hearing things like the market's crazy, things should be selling in 6 days, and that's not what we're seeing anymore. So the buyers and sellers are thinking of something from the past.
Yeah, and with the interest rates going up 1.5 points in a 1 month, 2 month period, that really affected. I mean, that just slowed the market down. It took. I call it gave the market a breather. It's still a good market, good solid market, and we were out of control at one time, and it was too hot. But now we're in a place where buyers can make good decisions and sellers are going to get more than they were going to get before.
Correct. I mean, interestingly though, interest rates don't really affect demand as much as you'd think, though. It's not quite. It doesn't force demand. There's still always demand, even when interest rates are 15% or 20%. People still have demand for houses they always sell.
Driven by jobs.
Yeah, it's driven more by the jobs and need than anything else. But the interest rates could have changed the market and maybe slowed it down a little bit, but without changing the demand, because we're still seeing very short sale times. So that hasn't changed yet. Just inventory and prices have changed, but time to sell is still very short. So we expect that time to sell is going to start to increase as the market changes.
Thanks, Bob.